Good evening, and welcome to the Shadowtrader video weekly for Sunday, August 26th, 2007. S&P 500 daily chart in front of you. Relatively bullish week. I think that a lot of people have been pretty much quite surprised at the amount of bullishness that has happened in this market over the last couple of weeks, given that we made these fresh swing lows here, sub 1400. The S&P went as low as 1370 on the sell-off. Since then, over the last 2 weeks, after the Fed opened up the discount window here, right, we've moved up We've moved up pretty sharply since then. This move off the lows in the S&P, just to give you an idea of how much this has been, is almost 109 points. It's 108 point something. And on the Dow, we have actually rallied from this low point 864 points off of this low, okay, on the Dow. So it has been a relatively bullish move. And the first thing I'm going to get into is basically I want to paint the picture on both sides of what the bullish argument here is and what the bearish argument is here, because there's definitely a case that can be made for both. And I don't really know, to be honest with you, which conclusion to draw, but I think by the end of the video, I think you'll get a better feel for what my opinion is and where I think that we're going to go in the coming week in the near term, and which argument I think is going to slightly win out, at least over the next few days. Okay. So given that, let me give you the bull argument first. We have a very strong move off the lows. Basically, the crux of the bull argument can be centered around what I call the inverted head and shoulders pattern, which is this, that is formed in the S&P. If you look on the hourly, you can see it clear. Basically, it's like, as the name suggests, an inverted head and shoulders, right? This is a shoulder, this is a shoulder, this is a head. It's an upside down person, basically. And this pattern is relatively bullish. I would say even more so than relatively bullish, and it very rarely fails back to the downside like this right away. And the reason being is that psychologically, the way the pattern plays out is that a lot of bears that are short in this area, okay, are then caught with their pants down, and now they have to cover. And as we've discussed before in this forum and in our broadcast and in our daily newsletter, which is available at shadowtrader.net for only $1 a day, we have said that covering a short is very often a market order, and buying stocks for later, for an investment, for a buy and hold, is generally a limit order. So people tend to hit the buy button when they're short and kill the pain or protect their profit or whatever. And I think that that's what we've seen over the course of this last week, these 5 days here, where every single minor pullback in the market was constantly met with a little bit of buying. The bears just seemed scared. They just stepped on it. And on Friday, they really stepped on it, where the Dow was up about 142.99, S&P 1687, NASDAQ Composite 34.99, right? That was Friday's action. So we definitely saw that playing out over the course of the week. Other things that strike me as a little bit bullish here, I would say, if you look at the pattern of the NASDAQ Composite, actually, first, go back to the S&P. We have now also broken trend in the S&P, right? The downdraft is over. If you measure it this way on the daily charts, from the high here at 1550 when we made the all-time highs in the S&P, right? We broke trend, right? NASDAQ Composite, oops, if I could type. NASDAQ Composite also, breaking trend, correct? And the Dow has not. Dow has still a little ways to go, but generally my take on this is usually that 2 out of 3 ain't bad, quote unquote, like the song says. And also, when you have 2 and 1 is lagging, the 2 strong will pull the 1 weak one. So I expect the Dow to crack trend a little bit and move up a bit. Okay? One more thing into the bull camp. Let's look at a Fibonacci retracement. I think we still have more room to move in the S&P, just a little bit. Oops, get this out of here. Where's my Fibonacci button? Hey, Adrian, put the Fibonacci on it. All right, there we go. Okay. Blew through the 25% retracement, blew through the 38.2. We blew right through the 50 right here at 1460, right? S&P went to 1480 on Friday, closing at 79.37. Look at this. 61.8% Fibonacci number is at 84, right? And look where the line ties in with. Dead on it, right? Old support, possibly becoming new resistance. 1, 2, 3, right over here, right? So do I think we're going at least a little bit higher? I would say so, right? Doesn't make a whole lot of sense that we would crack the 50 right here, 50% retracement from high to low, and not go to the next Fibonacci number, right? Once you cross one Fibonacci level, the odds are very strong you go to the next. And on top of these prior lows here, look what's about to touch, right? 50 MA. And the 50 MA daily is very, very important. That's a 50-period moving average, simple, on a daily chart S&P, 1494. Okay? So I think a little bit more upwards. Okay? That having been said, will the market retrace back or not after touching this level? I think it may, and it could be somewhat violent, and I wouldn't be surprised if we went back to at least maybe 1454, some sort of Fibonacci number over here. And the first thing that points to that, I would have to say, is the volume. And now I'm starting to give you the bear argument here. The volume has been horrifically weak. Look at the overall volume on the New York Stock Exchange, especially Friday. Look at this action here. It was down, heavy. You know, down a good clip, like 20% here. Lower, lower, lower. And look at how strong the volume was here when the market was selling, selling, selling. It's just much lower on the upswing. The other thing is, of course, the breadth ratio, which I talk about all the time. Let me move this over here. This is an S&P hourly, showing you my breadth ratio numbers, which we'll get into in a second in the overall volume matrix. It hasn't been all that strong. We've seen a number of readings here on the close at 50, at 60. You know, decent close on Friday at the 85, but the market was just rising on relatively weak breadth. Okay? So that right there strikes me as slightly bearish. But again, if you look at the whole thing, it seems to me that there's still a little bit of more room to the upside before we turn it back down. The question is, will these low overall volume patterns, right, take the market back down hard? It could be a relatively violent move down if we, once it goes. The question is how far down if we do a retest or not, right? When this happened in the markets in February of 2007, right, we did go back and we tested it twice. Look at this chart here. This is the S&P daily from all the way back Feb 07 to March 07, right? Here's the big debacle, right? Here's 227. Then the markets actually went lower. Then there was a strong bounce, but then we actually retested lower, and then the bulls kind of turned it on. So we shall see. We shall see. Generally, low volume pattern rises like this culminate in a toppy action, and then it gives you something like this. Big bodies down. Because you can't really go up on low volume all the time. Right? And then usually the market gets smacked back. So we shall see. Let's check the overall volume matrix while we still have a moment. This shows you what went on, excuse me, all particular week. And here on the breadth numbers, you can see that I wasn't very impressed with them. You know? We did get up into the 80s on these 2 days, but I would have expected more, to be honest with you. And here there were days, where the market was kind of inching higher. Dow tacked on 40 on Monday, for instance, but the breadth was just kind of even. There was still a lot of indecision here. And as you can see, the volume was definitely low. I would maybe give the market a day of accumulation here just because the volume was up a little bit. But, I mean, look at here. The NASDAQ put in a decent showing. Volume actually contracted. And this, to me, was just anemic on Friday, where volume just came down a bit on the NYSE, and, nothing really doing. So that's my take there. All right, so that's pretty much the argument on both sides. Expect a little bit higher, at the very least, to this Fibonacci level this week. I do want to leave you with a very brief reminder, Shadowtrader.net. Check out our newsletter if you can. Those of you that are watching this video on YouTube and are not familiar with our daily broadcast, all you have to do is send an email to focusreport@shadowtrader.net, and you can receive some sample copies of our newsletter, which is right here. This comes out every single day. It's only $1 a day. You can order it for $20 a month. Everything you need to know about what happened in the markets the day before is there. Also, what we expect to happen over the next couple of days, and most importantly, there's all the economic data that you need, and stock plays. Every day you get, anywhere between 2 and 6 stock ideas with entry points, where to put your stop, notes on why we think it's a play. If you are a subscriber, you can always email us, ask questions about the plays. If you're a subscriber to the newsletter, check it out, $20 a month. If you wanted some sample issues of it, we don't have a free trial, but you can get samples. Focusreport@shadowtrader.net. All right. On behalf of myself and the entire Shadowtrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, all the good people in Chicago, Illinois at Think or Swim, I wish you good trading and good night.